So welcome once again to this evening session. Um, we'll start with the revaluation of non-current assets. Non-current assets. So sometimes some organizations do value their assets after some period of time or after the assets have been used partly of its useful life. So they revalue it, example, to know what the value of the asset is, what the value of the asset is now, what the value of the asset is now, what the value of the asset is now. So IAS system allows a choice of accounting treatment for property, plant, and equipment. It allows what the treatment for the plant and plant equipment. So there are two models under the revaluation of non-current assets. We have two revaluation methods. So we have the cost model and then the revaluation model. The cost model and what? Revaluation model. We have the cost model and then the revaluation model. So what is the revaluation cost model saying? The cost model is saying that the plant PPE, that is the plant, property, plant, and equipment should be valued at cost less accumulated depreciation, less accumulated what? Impairment, less any accumulated impairment. So the PPE looks at using the cost model should be valued cost less accumulated depreciation, less accumulated impairment. And then we move on to the revaluation model. The PPE may also be carried at the revalued amount less any subsequent accumulated depreciation. So whereas the cost model is the cost less any accumulated depreciation less any impairment, the revaluation model is also the revalued amount less any subsequent depreciation. So these are the two models under revaluation, and it is coming to your exams. You cannot get right FR question without PPE. PPE would definitely come. That is a matter of the standards. That is what I would say, that it is a matter of all standards. All the standards in one way or the other relate to PPE. So two conditions must be met under the revaluation. Two conditions must be met under revaluation. What are the conditions? That the revaluation must subsequently be made with sufficient regularity to ensure that the carrying amount does not differ materially from the fair value at each reporting date. So there must be some regularity to ensure that there is no bigger gap. The gap between the carrying amount and the fair value does not differ. So that is one of the conditions that must be met for the revaluation. And then when an item of PPE is revalued, the entire class of assets to which the item belongs to must be revalued. Yes. So if it is the entire class of the asset is revalued, you don't say that this one is using revaluation method or model and this one will use the cost model. Everything must follow the revaluation model. So let's now look at the accounting for the revaluation. So restate asset from cost to revaluation. Whenever you revalue an asset, you change it from the cost to the revaluation amount. And then you remove any existing accumulated depreciation, less any accumulated depreciation. That is the second point. And then we include increase in current value in revaluation reserve. So whenever we are doing revaluation, we will compare the revalued amount with the cost of the assets, and whenever the difference would either give us an increase or a decrease. The difference would either give us what? An increase or a decrease. So when it's an increase, that will go to the revaluation reserve or the surplus. What I said. So that is part of the other comprehensive income. That is under the other comprehensive income. Let us look at the treatment. What is the treatment? What is the treatment? So how do you recognize gains and losses? What do you do when you compare the revalued amount to the cost? That will result in either revaluation gain, or a loss. What do you do with the gain? What do you do with the loss? That is what they are coming to look at. So comparing the revalued amount and the carrying amount would result in a revaluation gain or a loss. For gains, what do we do? If the first time revaluation results, let's say you are doing first time revaluation, that is the first revaluation that you are doing, and that results in a gain or a surplus, it is recognized in the other comprehensive words income, OCI. In the under comprehensive words income, I believe by now you know other comprehensive income. It is part of the profit and loss and other comprehensive income. So when the first revaluation results in a gain or a surplus, that would go to the other comprehensive income as revaluation surplus, right? Revaluation surplus, and not what? And not the P&L, right? It only goes to the P&L. When does it go to the P&L? It only goes to the P&L to offset any previous loss or losses as a result of a previous revaluation. So let's say before the first time revaluation that you did was a loss, and then you did a subsequent revaluation. So you see that maybe when you did a subsequent revaluation, you are getting a surplus. Let's say the first evaluation resulted in a loss of say 100, and then now you did another revaluation and you are getting a gain of say 80. The whole of this 80 would go to the P&L, because whenever we get loss, the loss goes to the P&L, of course. And then so when it goes to the P&L, it is waiting for a surplus from a subsequent revaluation. So that surplus would go and offset the P&L amount loss, and then when it will go and offset this, and then the loss remaining in the books will be 20. So 80 will go and cancel the loss in the P&L, and nothing will go to the OCI, because the entire 80 would go and reduce the 100 cedis in the P&L. That is how it is. So for losses, what happens? So for losses, if the first time revaluation, you are doing revaluation, and that revaluation results in a loss, that is a first time loss, it goes to the P&L. It goes to the what? P&L as an expense. But a subsequent loss in a subsequent revaluation will go to the OCI to reduce a previous surplus or gain balance. So what we are saying is that when we have a first time loss, it will go to P&L and not the OCI. When there is a subsequent loss in a subsequent revaluation, that loss, when there is a previous surplus or a gain in the OCI, that loss will still go and offset, or the surplus will offset the loss, as I demonstrated here. That is what the whole of this thing means. So here, offsetting is in respect of a particular asset in the OCI. example, you can't offset asset A and asset B, but you can offset asset A and A to A, B to B, C to C, etc. So let's say in the OCI you have revaluation surplus, revaluation surplus uh, for plants, plants 600. That is in the OCI. In the OCI you have revaluation surplus of 600, and you have done your revaluation and you are incurring a loss of say 100, and that loss that you are incurring or you are getting is with respect to say um machinery machine machine is different from plant. So this 100 cedis cannot come and reduce this 600, because that is not the same. It is not the same plant. It is not the same what item. This is machine, this is plant. We can only offset when the machine, let's say this is also a machine or this is a plant. That is where the two of them can reduce. So that is the meaning of the offsetting in respect of a particular asset, A to A, B to B, and C to C. I believe you get it. So let's take an example and see how it goes, how the revaluation goes. It's best you understand the concept. So someone should read for us quickly. Someone should read for us quickly.
Example 2.5. 𝒂𝒂𝒕 Limited revalues its assets into bracket buildings and decides to incorporate their revaluation into its financial statements. Extracts from the statement of financial position at 31st December 2013.
Let me see if I can take short and share it to the group so that. Please consider. Are you done reading?
Buildings. So 1,200. Depreciation 144. The building was revalued at 1st January 2014. The building was revalued at 1st January 2014 at 1,400,000. Its useful life is 40 years at that date. Show the relevant extracts from the final account at 31st December 2014.
Yes, what's the answer? Okay. So this is revalued. That is a revaluation question, right? So they said 𝒂𝒂𝒕 Limited revalues. So that would tell you that it is revaluation. What are there? The building was revalued, so that should tell you that this is a revaluation question. So let me see. So the cost is, let me use this. The solution is there already. Mm-hmm. So now they said Atenka Limited revalues its asset building and decides to incorporate the revaluation into its financial statement. Extract from the statement of financial position at 2013 as follows. Cost. So you have been given a cost, 1,200, depreciation, blah, blah, blah. And then the total give us what? The carrying amount. So we have 1,056. That is the what? Carrying amount as at 2013. In FR, we take note of date. We consider date very well. So we can see that the question is, show the relevant extracts from the final account as at 31st December 2014. So we can see that they have given us balance from the previous period. Remember, balance brought down, right? So balance brought down from the previous period. That is what? This amount. They are saying that the cost less depreciation and you are getting this as carrying amount. So this is your carrying amount as at the 31st what? December 2013. 2013. This is your carrying amount. They've given you the carrying amount. And you have to prepare the relevant extract. So under the standards, you prepare the extra. You don't prepare the full financial statement like you used to know in level 200. Here you prepare extra because not all the information that you need to prepare a full statement are available. So here, this 2013 is balanced from the previous period. So that is the carrying amount. That's why you can see carried amount 31st December 2013 from the previous year, which is 1056. That is the amount you are seeing here. Now that you have the balance from the previous year, which is the carrying amount, what next? They said the building was revalued at 1st January 2014. We had the balance from the previous year, which is 2013, and we know that 31st December 2013 is the same as 1st January 2014. Do we know that? Do we know that?
Yes, please.
So the building was revalued at the beginning at 1.4 million. So that is 1,400,000, right? So that is the revalued amount. Now, what was the amount before the revaluation? The amount, carrying amount was 1,056, and we revalued it for 1,400. So what do you think has happened? Do we have a revaluation gain or a revaluation loss? What do you think is happening? Do you have a revaluation
gain?
Revaluation gain. Why? Because the amount in our books is 1,056. After we have revalued it, an expert came to revalue it. We said, we called an expert. Please come and revalue this one for us. We want to know. So in our books, we already have 1,056. But then when we called an expert to revalue, he's saying that, oh, this will be sold at 1,400. It means that we are getting a revaluation gain. So the revaluation amount is 1,400. And then that resulted in a gain. So the gain plus the balance carrying amount will give us the revaluation amount. So this is how, so we write 31st blah 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 carrying amount 150. Then you come to, when was the revaluation done? Revaluation was done on 1st January, so 10114 revaluation. So over, and that is giving us 1,400. Now, what do you do to this amount to get the 1,400? Do you add or you deduct? So you add the difference, which is 344, and that becomes revaluation surplus. So that was how come you had this solution. Do you understand?
Yes, please, boss.
So now that we have this amount, 1,400, now what happens? That its useful life is 40 years at that date. Its useful life is 40 years at that date. So now we have the revaluation of 1,400. And we said we have the useful life of 40 years. So what will be our depreciation? The depreciation will be computed on the revalued amount. On the revalued amount. So that is our new amount after the expert has revalued the asset that we asked him to do. So we are getting 1,400. So you find the depreciation. What is the formula for depreciation? Cost less scrap value all over the useful life, estimated useful life, right? So here there is no useful life, so that will be our cost over the useful life, and that becomes what? 40 years, right? So that is the 1,400 divided by 40 years, giving us 35. Giving us 35. Depreciation will be less from this amount. And what are you getting? You are getting 1,365 as your carrying amount. So this is the carrying amount as at 31st December 2014. Show the relevant extract from the final account at 31st December 2014. So this is the carrying amount. But then so what will happen to this carrying amount? What will happen to this? This carrying amount will be the amount that will go to our statement of financial position, right? So that will be the amount that will go to the statement of financial position as the balance for the assets, as the balance for the or the carrying amount for the asset, right? That is it. And then this depreciation of 35 will go to P&L, profit and loss, as well the depreciation as an expense. Depreciation of 35, right? Depreciation 35, and then carrying amount of the asset. So the building is the asset. The building will be 1,365. That will be the statement extract from the statement of financial position and then the P&L. So that is it. Any question? OCI, evaluation gain will also go to OCI. So P&L and so OCI, we have the revaluation, OCI, we have revaluation, we have revaluation surplus, right? And that is 344. So assuming this revaluation resulted in a loss, as we were saying, that loss will go to P&L as revaluation loss, and any further or subsequent revaluation that will result in a surplus would go and reduce that loss first. When it reduces that loss, the difference will come to the OCI. So let's say there is a loss of say 300. Let's say there's a loss of 300, which will go to a first time loss, which will go to the P&L. This 344 would go and decrease the 300, and the remaining 44 will come to the OCI. I believe I'm making sense.
Yes, please.
So if there is no question, we proceed. Now let's go to depreciation of revalued assets. Once an asset has been revalued, the following treatment is required. Depreciation must be charged based on the valuation less residual value over the remaining useful life. So maybe you charge depreciation earlier. When you charge a depreciation, it means, let's say the depreciation was 40 years, as we saw from the previous question, and you did depreciation earlier, and that depreciation was, say, for 1 year. In the subsequent depreciation, you not divide it by the 40 years because you've already used 1 year. So that will be the remaining useful life. That's what this statement is saying. The revaluation will be less what the remaining useful life. So the depreciation would be computed using the remaining useful life and not the entire useful life because you have used part of the useful life, right? Then the whole
Yes.
chart must go to the income statement for the year. Annual reserve transfer may be made, revaluation reserve to earnings, for extra depreciation on the revalued amount compared to what cost. So when sometimes you have to transfer the revaluation to the equity, to the statement of changes in equity. So when we get to that place, I will talk about that. Asset depreciation. Okay, so that is it. So asset depreciation on revaluation. When there is an asset depreciation, there's an asset depreciation. Transfer the disclosed amount to statement of changes in equity, as I was saying. So when there is asset depreciation, you transfer the disclosed amount to statement of changes in equity. So that is debit the income statement with a depreciation charge, credit accumulated depreciation, and then debit revaluation reserve, credit retained earnings, credit retained earnings. Let us look at the timing of revaluation. Revaluation of PPE may take place at the beginning, during, or end of the financial period. So I think the first question that we solved was revaluation at the beginning, where the revaluation of was in 1st January 2013 or 14. So that was 2014, right? 1st January 2014. 1st January or 2014. So we can have revaluation at the beginning and then in the middle and at the end. Let's look at, depending on the timing of revaluation, computation of depreciation, revaluation results, surplus or loss, and the current amount of the asset would be different. Revaluation at the beginning of the year, the revalued amount would be used throughout the period. Revaluation at the middle or within the year, the revalued amount would be used from the date of revaluation up to the date of what? Reporting. Revaluation at the end of the year, the old value or the current amount of the asset will be used throughout the year. Example. So let me take the shot of this example and share it as well so that all right, so someone should read it for us.
Example 2.6. The value of Perfect Touch Limited building on 1st May 2019 was 120,000, and this had a remaining useful life of 25 years. Perfect Touch policy is to value its building at the end of each year. On April 30, 2020, the building was valued at 105,000 by surveyors. The opening balance in the revaluation surplus account was 20,000 cedis, and this was related to the building and this was related to the building. S&D does not make annual transfers to realize profits in respect of excess depreciation. Required. A. Prepare extracts of Perfect Touch Limited's financial statements for the year.
Sorry, but I believe you have it on your page, on the page, so you can. Let me see. Okay. So are you done reading? Are you done reading?
No, please. Required. A. Prepare extracts of Perfect Touch Limited's financial statements for the year ended 30th April 2020, reflecting the above information. B. State how the accounting would be different if the opening revaluation surplus did not exist.
Okay. So can I move to my whiteboard now? Since you already have the question, I've shared it to the general group. So let me switch to my whiteboard, right? Then it means you feed me with the figures, right? Okay. So that was example what?
Example 2.3.
2.16. So books of what? Perfect Touch. Perfect Touch Limited. Perfect Touch Limited. I'm sure it's in Ghana cities. So Ghana cities. So this will be our workings. Our workings. Our workings. So is that the value? Let me read it from my phone. The value of Perfect Touch Limited building on is it 1st May, right? 1st May 2019 was what 120,000. 120,000. So 1st May 2019, and when are we preparing the books? When are we preparing the extracts? That was 30th April, right? So April, May. Okay, April, May. April, May. So balance as at 1st May, what would be the carrying amount? So the carrying amount as at 1st May, May is what 05 or 05, 2019. Carrying amount, what would be the carrying amount? That is the balance brought down. What will be the balance brought down? Carrying amount is how much? 120,000. Carrying amount 120,000. And this had a remaining useful life of 25 years. So then we can compute our depreciation. So what will be our depreciation? What will be the depreciation? Depreciation is cost minus scrap value. Do you have any scrap value here? Do you have any scrap value here? Any scrap value? No scrap value. So that is 120 divided by useful life is 25 years. So 120 divided by 25 years. What are you getting?
4,800.
So that is giving us 4,800. So if you deduct, what are you getting?
115,200.
115,200. What? So what is the name given to this amount? What is the name given to this amount? So as at 30th April, is it April? Yes, 30th April 2020. 2020, because that was the day that the revaluation was done. Revaluation was done on 30th April 2020. The building was valued at 105,000. So what is the current amount? What is the current amount? Current amount as at that is 115,200, right? So that is the current amount. Then what happened? So that current amount, revaluation was on what date? Was still on that same date. The revaluation was how much? How much is the revaluation? How much is the revaluation? Hello, are you with me? How much is the revaluation?
20,000.
On April 30th, 2020, the building was valued at 105,000.
Okay.
So that becomes our revaluation. That becomes our revaluation. So what figure do you add or deduct to this amount to get this amount? So that would be what? That would that be a loss or a surplus? Would that be a loss or a surplus? Would it be a loss or a surplus? Would it be a loss or a surplus? Give me the figure.
Um, 10,200.
And is that a loss or a surplus? That is a loss. Carrying amount in the books was 115,200. Now it was revalued. The asset was valued at 105,000. The carrying amount, comparing the carrying amount and this amount, has there been in the books it was 115,200. Now the revaluation valued it at 105,000. Is it an upward revaluation or a downward revaluation? The thing is 115,200. Now you are having 105,000. So it means it is a loss. So this loss, how do we treat this loss? Now let's go and prepare our extract. 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 So we have the P&L, statement of the P&L and the OCI, P&L and other comprehensive income. So under P&L, which item will come to the P&L? Which item will come to the P&L?
Is depreciation.
Depreciation is an expense, so it will come to profit and loss. What is the amount for the depreciation?
4,800.
4,800. What else will come to the P&L?
The revaluation loss.
Revaluation loss. Revaluation loss. Okay. Revaluation loss. But don't you think we have a surplus that would offset it? In the question, don't we have a surplus that would offset it? The opening balance of the revaluation surplus was how much?
20,000.
Look into the question, though. If you don't look into the question and are looking at the solution, you won't understand. Looking at the question is important to me. If you are looking at the solution just like that, without reading the question to understand yourself, then you are just here, Keke. You are just here. You are just here. Read the question, not the question, I say. So the opening balance in the revaluation surplus account was 20,000, and this was related to the building. Listen to the statement. This was related towards the building. The opening balance in the revaluation surplus was 20,000, and this was related to the building. So there is no need to bring the loss here, because how much was even the loss? How much did you get for the loss? 10,000, right? 10,200. There is a surplus of 20,000. That 20,000 will offset, and there is nothing will be left here. So let's assume the loss we are bringing it here. Let's assume we are bringing it here, because let's assume. Okay, so let's move on to the next item. Now we prepare our OCI, other comprehensive income. So they said that we are having a balance of revaluation surplus. They said we are having a balance of 20,000 from the question. There's a balance of 20,000. So this is the balance BD. Now, this 20,000, there has been a loss, revaluation loss. So the revaluation loss is 10,200. The revaluation loss will not offset it here because we already have a balance of the surplus. So there is no need to bring it here. If we were not having, we would have brought it here. But because we are having a surplus, the revaluation loss, less revaluation loss of 10,200. So what will be the balance left? What will be the balance left? So this revaluation, because we are already having a surplus that would offset it in the OCI, there is no need to bring it in the P&L. So what do you have?
30,200.
So that would be, sorry?
30,200 for the OCI.
Hey, sorry.
800.
What do you have? What do you have as a balance?
9,800.
9,800. 9,800. So now this 9,800, that will be the OCI. Now we go and prepare the extract for statement of financial position. All these are extracts. They are not the full statement financial position that you know. So they are extracts. Extract is not full. That is just part of it. So there we have the non-current assets, right? Non-current assets. So what are the non-current assets? What are the non-current assets? You have only one building, right? The building. What is the carrying amount from the workings that we did earlier? What was the carrying amount that will go to the? So the carrying amount is what? What is the carrying amount? That will be the revaluation in the books. Revaluation in the what? In the books. 10,500. Is it 10,500? And now 105. Now 105,000. 105,000. So this revalued amount will be the amount that will go to the books. So this is like cost less accumulated depreciation, net book value. You get it? So the cost is the carrying amount, 115,200. Accumulated depreciation, 10,200. Then you get the net book value, 105,000. So here we are not bringing the cost and accumulated, we are just bringing the net. That's why we are choosing the revaluation amount. So the building is 105,000. What else? Equity. What will be the equity? The equity will be revaluation surplus will also go to equity. Revaluation surplus. So what is the revaluation surplus? What is the surplus remaining? The surplus remaining was 9,800. That one will go to. So that is it for the extract. That is it for the extract. Any question? Any question? Okay, so if there is no question, then we proceed. So let me ask this question. Do we depreciate land or we don't depreciate land?
We don't depreciate land.
and that is wrong. Why?
Land appreciates. It doesn't depreciate, so why?
Who told you land doesn't depreciate? It depreciates. Land depreciates.
Okay. So how will you depreciate the land?
So the first question to ask myself, if someone asks me, does land depreciate or not? I'll say yes, it depreciates, and I'll challenge the person. I remember under financial accounting, I told you that land doesn't depreciate, right? Yes, that was at your level. But now can challenge you that land depreciates. So I'll ask the person, which type of land are you talking about? Is it a freehold land that you are talking about, or a leasehold land? A leasehold land. If you are talking of freehold land, then you are right. We don't depreciate freehold land. We don't depreciate freehold land. But if you are talking of a leasehold land, then we depreciate. We depreciate. We depreciate. Why? Freehold land does not have an estimated useful life, so it is infinite. You don't know. You don't know the useful life. You don't know the useful life of the land. So how would you depreciate it? Because depreciation is with respect to the useful life. Is with respect to the useful life. But then with the leasehold land, you are going to lease a land for how many years? For 20 years, for 50 years. Then we can depreciate it because you know the useful life. Useful life is 50 years. Useful life is 20 years. So a leasehold land for a specified period, that one we depreciate. You can determine its depreciation. You depreciate it over the lease period. So the lease period may be maybe 50 years. Then you depreciate it with respect to that. So in general, if it's a freehold land, we don't depreciate, but if it's a leasehold land, we depreciate. So if the question say a leasehold land of blah 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 blah, they say, oh, we don't depreciate land away. Okay. Why? Because we don't depreciate land. If it's a leasehold land, we depreciate. Freehold land, we don't depreciate. Thank you very much. Let's proceed. Hannah, me pause here. Okay, so I ended here with the typing. Okay. So let's look at another. Let me. Okay. Okay. Are you with me? Can you hear me? So let's try another question and see. Um. Okay. Let me take shot of this question. Mm. So I'm sharing it to the group. So this thing is blur. And this thing is blur. So I've shared it. Someone should read it quickly.
I'm reading.
Okay.
The following trial balance extract the following trial balance extract relates to a property which is owned by what? I'm coming, please. I'm not seeing it clear. The following trial balance extracts relate to a property which is owned by victim as oh, I don't know. The question is blurred on my screen. I think someone else can read.
Boss, let me read. The following trial balance extract relates to a property which is owned by a victim as okay.
Are you done reading? Vivian, are you done reading?
No,
Boss,
please.
she said she cannot see from her end, so I'm reading. The following trial balance extract relates to property which is owned by a victim as at 1st April 2014. On the debit side, property at cost into bracket 20 years original life. The debit side is 12,000. Then accumulated depreciation as at 1st April 2014 on the credit side is 3,600. On 1st October 2014, following a sustained increase in property prices, victim revalued its property to 10.8 million. What will be the depreciation charge in victim's statement of profit or loss for the year ended 31st March 2015?
Okay. So what will be the what's the answer? Yes. The books of victim, right? Books of victim. So that is the first thing. And then they are asking for what depreciation. So we do our workings. We do our workings. Right? So now what will be the cost? What is the cost? What is the cost? What will be the carrying amount? How do we get the carrying amount? Carrying amount is the cost. Carrying amount is cost less what depreciation, right? So as at what date? What was the date? Let me see.
As at 1st April.
As at first April, right? So
Yes.
1st April 2014. 2014. 1st April 2014. So the cost of the assets. What is the cost of the assets? Cost of the asset was how much? So that what is the asset? The asset is property at cost. 20-year original life, right? So debit.
Yes.
12,000. So the cost is what? 12,000. The cost is 12,000. Cost has a debit balance, so it is at the debit side, 12,000. It is at the debit side, 12,000. What is the depreciation? What is the depreciation?
3,600 on the credit side.
That one is the accumulated depreciation. The accumulated depreciation. I think so. That one is accumulated depreciation. Let's make it a single year depreciation. Let's make it a single year depreciation. Because when we get to the transferring of the assets, that is transferring of the assets to the statement of changes in equity, we would be needing the single years. For it to be easier for us, it's prudent we make it a single year's depreciation. It's prudent we make it what? A single year's depreciation. So, okay, let's continue. Let's make it this way so that you don't get confused. So, what is accumulated depreciation? Accumulated depreciation is how much? What is accumulated?
3,600.
3,600. So what will be our carrying amount? What will be our carrying amount? What will be our carrying amount?
1,400.
Carrying amount. What will be our carrying amount? That's at that date.
8,400.
8,400. 8,400. 8,400. Okay. So with this 8,400 as our carrying amount, now we can look at the revaluation. When was the revaluation done? When was the revaluation done? Evaluation was done on which date? So we compare this amount to the revaluation amount to determine whether we are making a revaluation surplus or a revaluation loss. So when was the revaluation done? On 1st October 2014, following a sustained increase in property prices, Vecton revalued its property to 10.8 million. So it means it was in the business for some period of time, right, before the revaluation. Let's determine the period. Let's determine the period before the revaluation. Because the revaluation was on 1st October 2014. 1st October 2014. So from April to October, that is how many months? From April to, so 1st October is the same as 31st was September, right? 1st October. It is the first, with the same as 31st of September. It means from April to September. April to September will give us how many months?
6
April
months.
To
6 months.
How many months? 6 months.
6 months.
April, May, June, July, August, September. So that is 6 months. That is 6 months, right?
Yes.
So now, depreciation will be for 6 months. So depreciation for 6 months. 6 month depreciation. Depreciation for 6 months. So that is depreciation for 6 months. So what is the formula for depreciation? Cost, right? Cost over useful life. What is the estimated useful life? What is the useful life?
Years.
20 years. So that is 20 years. 20 years. And this is a 1 year depreciation. If you leave it like this, 1 year depreciation, but you want a 6 month depreciation. So what do? You multiply by what? 6 over 12. So what do you have?
$300.
Okay. 300, right?
Yes.
300. All right. So 300 did that 400 minus 300. What do you have? That would be the carrying amount as at first. When was the revaluation? Carrying amount as at 1st October 2014 for the revaluation. So carrying amount would be what? 8,100.
100.
Right. I and what take it short, right? Of the answers.
Oh, okay. And we are now back now. I take a screenshot.
So carrying amount as at that date. Then revaluation was what on which date? Revaluation was still on that the same date. So what did I'll leave some space to revaluation, and then I bring the line here. What is the revaluation amount?
$10.8 million.
10.8 million. 10.8 10,800, right?
Yeah.
Okay. So is it an upward revaluation or a downward revaluation? Is it an upward revaluation or a downward revaluation? Upward revaluation. So that will lead to a surplus.
Upward.
So revaluation surplus. What is the difference?
$2,700.
2,700. 2,700. Okay. Okay. All right. So this revaluation as at 1st October 14 is the 10,800, right? But what is the question demanding? Let's look into the question. What is the question demanding? Someone should read the requirement. Read the requirement again.
What will be the depreciation charge in Victim's statement of profit or loss for the year ended 31st March 2015?
2015. Wow. And we have revaluation as at 14. Means we have not gotten to 2015. So let's work to 2015. So this 10,800. Now let's compute our depreciation. We want to get to 2015. 31st what? March, right? 31st March. Yeah, 31st March. So depreciation continues because it will be in the business up to 31st March. So depreciation, now we have a value of 10,800. That is the value. What is our depreciation? The depreciation would not go to the cost. It will be on the revalued amount, which is 10,800, right? 10,800. Now, what is the remaining useful life? Remember that when you were reading it, it said it should be on the remaining useful life. Do you remember that?
Yes.
Yes, it said the revalued amount should be on the remaining under the note when I was reading. I stress on that. So now it is, what is the general useful life? What is the total useful life? What is the total useful life?
Will it be 21 years?
Total useful life. I mean, not the remaining. Total useful life that we use.
20.
That was 20 years. That was 20 years. Now we want remaining useful life. So how do you get the useful life? How do you get the useful life? If you want to know the number of lives that you have used, that is used life. Let me bring it down. Let me bring it down here. Okay, here. Used life is equal to accumulated depreciation. It's a formula. Accumulated depreciation over annual depreciation. Hey, we have financial reporting now from the day one. I'm sorry. Financial reporting, constant practice. If you are not, every day you must practice financial reporting. If you don't practice financial reporting, you have a long way to go. So, used life is equal to accumulated depreciation over annual depreciation. So, what is the accumulated depreciation? What was the accumulated depreciation? What was the accumulated depreciation?
3,600.
Yeah, 3,600. What we use the accumulated depreciation is. Can you see the 3,600?
Yes.
That is the 3,600 all over the annual depreciation. What is the annual depreciation? What is annual depreciation? The depreciation is what? Cost over useful life. So what is annual depreciation?
300.
What is annual depreciation?
600.
I can't hear you.
Will it be the 300?
No, the 300 is half depreciation. Half.
Oh, okay.
Part depreciation. We want to know the annual, the full depreciation. This one, because the depreciation was for a period of time. That is why we divided it times. We multiplied it times, was 6/12. Assuming this thing was not there, compute it. What do you get? It will be 600, right? Yes, 600.
Yeah.
Annual depreciation is 600. That is just the cost over the useful life. That will give you the annual depreciation. So what are you getting?
6.
You are getting 6 years. 6. That is 6 years, right?
Yes.
That is 6 years. But wait. So now that we have the 6 years, now when did we start using the assets? When did we start using the assets? So let's look at the date. So from July to when was the revaluation? The revaluation was done on the 10th, right? 1st October 2014. From that month, we still use the assets up to the end of that year, up to the end of that 14. So October, let me see. Okay, so October, November, December, January, February, March. I don't know if you get it. Do you get it? Do you get it?
Yes.
You see, we ended at 1st October 2014. Now, from October, because we were preparing us at 31st March 2015. So from October, now, October, November, December, January, February, March. So there is another 6 months. There is an additional 6 months. We have also used another additional 6 months. In addition to the 6 years, we have used an additional what? 6 months plus 6 months. And so that will give us what? That will give us 6.5. That will give us 6.5. 6.5 years. So that is the used life. Any question?
I have a question.
Yes, please ask your question.
Please, can you add a 300 to the 3,600 and use it to calculate the useful life straightforward?
Can you use the what?
Can you add the 300? They have depreciation of the 300 to the accumulated depreciation of the 3,600 to calculate.
You add the 300 to the
3,600.
Then you are getting 3,900.
Yes.
Then you divide it by what?
Accumulated depreciation by your
So,
annual depreciation.
So 3,900 over 600. Is it 3,900 over 600?
Yes.
So what are you getting for that?
6.5.
Okay, so that is also correct. That is 6.5. So that is also correct. That is also correct. Because this is depreciation. You are adding this 300 to that, getting 3,900. You add this 300 to that, and you are getting 3,900. Then you divide it by the annual, and that is giving you straight up 6.5 years. That is also correct. That is also correct. I think that one is much faster as compared to this. But then what I want you to understand that I broke it down into two. That the 6 years as up to 1st October, the depreciation up towards 1st October. Then now from 1st October to 31st March, that is also an additional 6 months. So that month too has been used. You want the depreciation for that one as well, and that is 6 months. So that one to be added, making 6.5, because 1 year is 1. So if half of 1 year is 0.5, I don't know if you get it. So the 6 months is equivalent to 0.5, 0.5 years, right?
Yes.
So 0.5 years plus that is giving 6.5. But this one is also correct. So that is good. That is good. So now that you have known the used life, now you know the used life. So what do you move? What is the next thing? We want the remaining useful life. So how do you get the remaining useful life? What will be our remaining useful life? Remaining useful life. Remaining useful life. That's given us what?
13.5.
13.5.
The first person that has been speaking. Why is it that always in the class your microphone is far away, like your voice is far away from the microphone? Always.
I don't know. I think it's the app.
Is it not the app? You are the only person. When I'm speaking, I can hardly hear.
If there's a class like you talking and I'm talking, like you can hear me.
Look at now, I can't even. I know you are speaking, but I can't hear you. So 13.5 years. Am I the only one not hearing it?
No.
Uh-huh. So 13.5 years is the what? Is the remaining useful, is the remaining useful life. So this depreciation, will it be a full year depreciation? Will the depreciation be a full year depreciation?
No.
Why no? Because the depreciation, we know the depreciation up to 1st October 14, and we are ending at 31st March 2015. So now what are we interested in? We are interested in depreciation from 1st October 14 to 31st March 2015. So that's the depreciation we are interested in. But we know up to this one already, up to the 10/14 already. We are interested in assets. So from 1st October to 31st, that is how many months?
6 months.
So that is 6 months. So we want 6 months depreciation. We want 6 months or depreciation. So 6 month depreciation, what would it be? That would be times 6/12. So what do you have?
400.
400.
Yes, please.
So 400, you deduct it from the 10,800. What do you have?
10,400.
You're having 10,400. This is your carrying amount. Carrying amount as at 31st March, right? 2015.
Yes.
But the question said, what is the depreciation for 2015, right? So now, how do we get our excess depreciation? How do we get the excess depreciation? Let me see. How do we get excess depreciation? So, how do we get the excess depreciation? In the note, did we read something like that? Excess depreciation. Did you read something like that? Under excess depreciation. Hello.
Right.
Did we talk about excess depreciation?
That's really
Omonti Bapuano. Yeah, can be for excess depreciation one.
the
Please, Omonti. Menka Igbana. Did you talk about excess depreciation?
in the question no.
Hey, no, not in the question, but then generally when we were talking about, okay, you let me use. So yes, excess depreciation on revaluation. Excess depreciation on revaluation. Transfer the disclosed amount to the statement of changes in what? Equity. Statement of changes in what? Equity. Statement of changes in what? Equity. In what? Equity. In what? Equity. Okay, debit income statement, credit accumulated depreciation, debit revaluation reserve, credit retained earnings. Excess depreciation means that you have overcharged the depreciation. You have overcharged what? The depreciation. So if you have overcharged depreciation, depreciation reduces our what? Surplus, our equity. Depreciation reduces our equity. It reduces our retained earnings. It reduces our what? Retained earnings. So if it reduces our surplus or retained earnings, then what do? You add it back because you have overcharged, right? You have overcharged the what? The depreciation. So this is the treatment of the excess depreciation. Let's go refer it to the question. Let's refer it to this question. Let's refer it to this question. So we have a formula for the excess depreciation as well. Excess depreciation has a formula. Excess depreciation. Excess depreciation is also equal to revaluation surplus all over the remaining useful life, all over the remaining useful life. That is the excess what depreciation. So we transfer all the excess depreciation to the statement of changes in what? Equity. In what? Equity. In what? Equity. So we can see that, look at the depreciation. Look at the depreciation here. Depreciation in this year was 400. What of the depreciation here? Depreciation was 300. Excess depreciation. So we would have learned this. So 300, 400 minus 300 is giving us 100. That is the excess depreciation. But this is not the full year. This is not the what? The full year. This is also not the full year. So what will be the full year for this one? What will be the full year? Full year's depreciation. What will be the full year's depreciation?
800.
800. What will be the full year's depreciation for this one also?
600.
600. Therefore, the excess depreciation is what? The difference, which is 200. Or the formula for excess depreciation is what I've given. So let's work with this. What is the excess depreciation? What is the excess depreciation? Oh, go. The excess depreciation is equal to revaluation surplus. What's the revaluation surplus? What was the revaluation surplus? What was the revaluation surplus that we had?
2,700.
2,700. That is it. The revaluation surplus divided by 2,700. 2,700 divided by the remaining useful life. Remaining useful life. What did you get for the remaining useful?
13.5 years.
So what is the answer? What are we getting for that?
200.
That is giving us 200. So either you go by this method, or you go by the method that I've shown you, or you go by the earlier one that I showed you. So you calculate the yearly depreciation for each of them. If you compute the yearly depreciation for each of them, then you find the difference. But if you are not you are not too certain about that, then you use the formula to get the excess depreciation. Excess depreciation, once again, is when you have overcharged the depreciation. When you overcharge the depreciation, it means you are reducing our retained earnings. You are reducing our retained earnings. So what do? You have to go and add it back to the retained earnings in the statement of changes in equity. In the statement of changes in equity. Because you have overcharged the depreciation. You have overcharged the depreciation. Proceed.
Mhm.
All right. So we are done answering the question, right? So this question asks for what to be the depreciation, right? So we are done answering the question. So the depreciation would be added back to the retained earnings, the statement of changes in equity.
Hello.
Hi, we can't hear you. I cannot hear you. I cannot hear you. The one speaking, I cannot hear you. Okay. So we are done answering the question. But note that
Hello.
this amount, where would you deduct? You would take it from the revaluation surplus. Revaluation surplus?
Please, can you hear me?
Yes, now I can hear you. And then add it to the retained earnings. Transfer to the retained earnings. Excess depreciation will be transferred to the retained earnings. Where will it be transferred from? It will be transferred from the revaluation surplus. So we deduct it from the revaluation surplus, add it to the retained earnings, and the statement. I believe you know how to prepare the statement of changes in equity. Statement of changes in equity. Then you have the um, you have is it the retained earnings, the retained earnings revaluation surplus? Xavier, ask your question.
Please, can you
Xavier,
hear me?
yes, I can hear you.
Please, why did you calculate for useful life again when there was already
When there was what? We cannot hear you. We are sorry. Okay, so now let's move on to the disposal of revalued non-current assets. Disposal of revalued non-current assets. So I've not typed for that, but you can write. So disposal disposal of revalued non-current assets. Non-current assets. Xavier, is your network clear now? Xavier, on ownership gone. Okay. So the disposal of the revalued non-current assets. This shows the calculated, this should be calculated as the difference between the net sales proceeds, and the carrying amount, and the word carrying amount. Carrying amount, let's say the carrying amount of the asset is 10,000, but you are selling it, the net proceeds, that is what the amount that you receive when you sell the product. So let's say proceeds. Net proceeds is 12,000. So what will be the disposal amount or the proceeds from disposal? Net sale proceeds. So you see that you are getting 12,000. So it's like you are making a profit of what? 2,000, right? So now, any remainder, the profit that you are making on this will be sent to the retained earnings. The profit that is in it will be sent to the retained earnings. It will be sent to what? Retained earnings. The profit that you are making on this will be sent to retained earnings. I believe you know retained earnings is a cumulative profit, right? Do you know that retained earnings is cumulative profit? Hello.
Why?
Yes, no.
Your
No.
profit that you make, part of your profit will be retained in the business. Retained in the business. And then part will be given out to shareholders as what dividend. So the retained earnings is profit. It's a cumulative profit. That is what I was saying. Do you get it now?
Yeah.
Yes.
So let's take an example and then we'll be done for property, plant, and equipment, PPE. When you go for tutorials, I believe you've started tutorials and you've been solving questions, right? Have you started with tutorials for FR?
Yes, please.
Oh, okay. So you have been solving questions. You started solving questions.
Yes.
Good. FR, you need to be practicing it. Practice makes sense. If you don't practice, you only got two words. Now we get who read commercial law. Who hear it? Get now. You think this is a last minute course? So let's take one last example and then we call it an evening. An evening. An evening. Last question. Last question. Last question. Last question. Last question. Last question. Then I'll give you one assignment too, so that you practice. What I say. And you can also practice your tutorial set questions as well. Tutorial set questions, you can also practice them. You get it? If you don't get it, forget about it. So this is for disposal. So the first example, the 2.6 that we solved now. The B, there was a B question, right? I just saw it. State how the accounting would be different if the open revaluation did not exist. Did you see that? Can you see that? Hello.
Why?
Hello. Can you
Why?
did you see the B part of the perfect touch question that we solved?
I joined late.
Who is that? Who joined late?
Me.
Me join late. Me join late. Oh, okay, I
Me.
see. I see.
Please.
So,
I was
okay.
trying before to download it.
It's what?
I
Sir.
said I was
Hmm.
finding it difficult to download the app, so that's why I was.
That's why you join late.
Yeah.
It means for the past days you've not been joining the FR class. Not even FR class, but then
Because
our own
no, because of the time. That time I might be in the church.
wait time.
You were starting at 5:30.
3 to 5.
It was sorry, it was 3:30. That time I will be in church by that time.
Ah,
So I was not able to join. So I think the 6:30 is helping me.
ah. Because I like evening class. That time the the environment is cool. But the afternoon, then your mind is hot. That's why I did it. Um, 6:30. But usually 6:30 I go somewhere. I go to church. Today I didn't go to church. That's why I shifted it to this time.
PM.
Yeah. Okay, so let's. I just shared the question to the group.
Sir.
Okay. Yeah.
Because I don't know whether it's just me, but in my screen, it says meeting pause.
Yes, I have closed the screen. I would
How?
turn it on later. So we'll start reading. Let's continue. Let me share or resume my screen now so that you can see my screen. Can you see now? Can you see now?
Yes, please. That's
Yes.
it.
Okay. So someone should read the question quickly. Let's finish.
A property costing 750,000 Ghana cedis was purchased on January 1st, 2014, and is being depreciated over its useful life of 10 years. It has no residual value. On December 31st, 2014, the property was valued at 810,000 Ghana cedis. There was no change to its useful life. On 31st December 2016, the property was sold for 900,000 Ghana cedis. What is the profit or loss on disposal?
What is the profit or loss on this one? Yes, what's the answer? So let's do our workings. So the workings is also known as the PPE schedule. I mean, fan count one can say, hey, you didn't say PPE schedule. It's the same as the PPE schedule. And um, so here we have how many PPE? Property costing 750,000, right? This 750,000. The 27 should be your assignment. Let's solve this rather. What I wanted to give you as assignment is broad. Let's solve that one rather. So this is your assignment, 27. Let me let me solve. Uh, okay, let's solve this one. But I believe you can do the assignments, right? It's still the same format you find, and then whatever you get, you compare it to the proceed, and then you determine whether it's a profit or loss, right? I believe you can do that. Who cannot do that?
Me.
Me cannot do that. Hey, this me, she is worrying us. Oh. This me is worrying us. It's still the same format as what we solved earlier, but with this, you compare the carrying amount, the final carrying amount, or the final revaluation amount to the sale. I think the sale was 900,000. Let me see. The sale was 900,000, right?
Yeah.
900,000. Yes. So you compare it to determine whether there is a profit or loss. I'm even saying the answer to you. It's an assignment, but I'm still saying the answer to you. Let's have this last one. Then we call it an evening. Yeah, upon practice. Effort, be practicing FR and quantity more. FR and quantity more. Then that doesn't mean you rest on the other courses. You need to be balance yourself. Okay, let me see. So I'm sharing it now. I want you read it quickly, as fast as possible. You're not making me feel the class, car. You don't read quickly. Pa, pa, pa. Ah, I don't know what your doors are.
Mm.
Sharp, sharp, sharp. My door. Hey,
This is a question though.
I show you accounting student. I show you accounting student.
Yes, we are.
Ah, okay, sorry.
Illustration 25. A company
Yeah.
revalues its land and buildings at the start of the year to 10 million Ghana cedis. Into bracket, 4 million Ghana cedis for the land. The property costs 5 million Ghana cedis. Into bracket, Ghana 1 million for the land. 10 years prior to the revaluation. The total expected useful life for 50 years is uncharged. The company's policy is to make an annual transfer of realized amount to retained earnings. Show the effect of the above on the financial statement for the year. Please, I'm done.
Oh yeah, thank you very much, very much. What's your name? What's your name? The one who just read. What's your name? Hey, don't have a name?
Please, what did you say?
I said, what's your name? The one who just read.
𝒂𝒓𝒕.
Hey, really? So, what's the name of the business? That's company River. So they didn't give us any name, right? So
Yeah.
River. So what is our PP? Sorry, is someone speaking? So we have land and building, and we know that freehold land does not depreciate. Sorry, it does not depreciate. Sorry, does not depreciate. Freehold land doesn't depreciate. So we have to separate the land from the building. You have to separate the land from the building. If the question is silent, it means it's a freehold land, right? So we assume it's a freehold land. So what is the cost of the land? A company revalued its land and building at the start of the year, 10 million. 4 million for the land. The property cost 5 million. A company revalued its land and building at the start. You see, revaluation can be at the start, at the beginning, during the middle, or the end, right? So this one is at the beginning, and the revaluation was 10 million and 4 million for land. It means that 6 million is for what? Building. Because they've given us there 4 million for land, so 6 million is for building. The property cost 5 million. So the cost of the property is 5 million. So let us write the cost. Cost of the property was 5 million. And what happens? 1 million for land. Oh, okay. So land, they've divided it for us. So we have 1 million for land. 1 million is 1,000, and automatically 4,000 would go towards to the building, giving us a total of 5,000. Giving us a total of 5,000. What is our accumulated depreciation? The property cost 5 million for the land, 10 years prior to the revaluation. 10 years prior to the revaluation. The total expected useful life of 50 years is uncharged. Is it uncharged? Yes, uncharged. So what is our accumulated depreciation? What is our accumulated depreciation? Our accumulated depreciation is what is just on the building, because we know land, freehold land does not what? Depreciate. Freehold land does not depreciate. Divided by what is the useful life?
10 years. Hey, sorry, 50. Hey. The total expected useful life is 50
Yes,
years.
please. It's 50 years, yeah, yes. And they said the property cost 5 million, 1 million for land, 10 years prior to the revaluation. What does it mean? Huh? Before the revaluation, right? Right? Before the revaluation, that is the prior to revaluation. Anna?
Before.
Yes.
So it means the asset has been in the business 10 years before the revaluation. So our accumulated depreciation will be 4,000 times 50 years times 10 years. Right? That is the accumulated depreciation. prior to revaluation. So what would be balance? What would be the answer? There is no revaluation here. What would be the answer for the building?
800.
What are we getting?
800.
Did I hear someone 800?
Yes, please. 800.
800. Okay. So what would be our carrying amount? What would be our carrying amount? Carrying amount. Carrying amount is cost less accumulated depreciation. Carrying amount is what? Cost less accumulated depreciation. So carrying amount is giving us what is our carrying amount? Carrying amount is giving us what? 1,000 still. This is it 3,200? 3,200. Then we compare this to the revaluation. Revaluation before revaluation, they said 10 years prior to the revaluation. So revaluation, what was the revaluation? A company revalued. See, bro, from a company was revalued. So that is the word revaluation. Are you following?
Yes.
So revaluation for land was how much?
Land. 4 million.
Yeah, that was 4 million, 4,000. What of the building?
It will be 6 million.
6 million. 6 million. So comparing 4,000 and then 1,000, what do you think? Is it an upward revaluation or a downward revaluation? Is it an upward revaluation, downward?
Upward.
Upward. So that will lead to a revaluation surplus. Revaluation surplus. So what is the revaluation surplus?
3,000.
3,000. What do we get here?
Minus
2,000, 8,000.
Yeah, 2,800. So that is revaluation surplus. This is the revaluation amount. So now we have gotten the revaluation amount. What is the date? Now we have the revaluation amount. We have to look at the date to know whether we will continue with subsequent depreciation or we hold on. What is the date? Okay. So even the useful life is how much? 50 years, right? It then show the effect of the above on the financial statement for the year. Which year? You don't know the year?
Yes.
But so now we know that the total, what is the total useful life of the asset?
The total useful life.
It's
It's 50 years. How many years have we used?
10.
How many years have we used?
10.
10. So what is the remaining useful life?
40.
40. So now we compute the depreciation. We continue to compute the depreciation. Depreciation, is it for the land? Is it for the land?
Yeah, for the land.
Hey, wait a minute. Stand out here.
We don't depreciate the land. It's
So building, right? So
So,
6,000 divided by 40 years. Remaining useful life is 40 years. It was 50 years. We've used accumulated years, 10 years. You have already used 10 years. Remaining 40 years. So these 40 years would give us annual depreciation of how much?
150.
150. So what do we have as our carrying amount? Carrying amount, this will still be 4,000 in the books. And then this one will be what? 5,000 what?
800.
Is it 450?
Yes.
850?
850.
Yeah, 850. So this is the carrying amount. Now, let's show the effect on the financial statement. So what are the financial statements? P&L, P&L, and other comprehensive income, and other comprehensive income extract, right? Another comprehensive income extract. So what do we have? So take P&L. P&L. What comes into the P&L? What comes into the P&L?
Depreciation.
Depreciation. So what is the depreciation amount? What is the depreciation?
Please go back.
Is that? What is the depreciation?
$150.
Now where's the more general sano? Hey, eh. What else? What else goes into the P&L? Is that all for the P&L?
Revaluation.
The revaluation loss.
That will go to
Oh,
There was no.
Revaluation gains.
Revaluation gain will come to a P&L.
no.
No, loss.
Do we have a loss?
No.
It means then we have nothing apart from the depreciation. Okay. So what will go to the OCI? Revaluation surplus, right? What is the revaluation surplus amount? What is the revaluation surplus?
Eight.
Revaluation surplus will be how much?
The 3,800.
2,000.
800. And then the surplus are two.
So what do we do?
Are you going to write it separately or you add?
Mm-hmm.
Yeah.
So you see that if the surplus relate to a particular asset, you offset A to A, B to B, right?
Yeah.
Okay.
Yeah. So from that statement, what do you think we should do?
Then we should write one for plan, one for.
Sorry?
We should write building.
We should write them separately.
Land.
We should write them separately. Okay. So land. Land is what? Is it 3,000? And then building. Building is what? 2,800. 2,800. 2,800. Okay. So then you get a total
5,800.
5,800. Okay. So when you're offsetting, you take land, offset land to land, building to building. Now, are we done? We prepare our what's the name? Statement of
Financial position.
Financial position. Sorry.
Yeah.
So what is the non-current assets?
The non-current assets, land and building.
So land and building.
Yeah.
Land and building. Now this is a separate and also.
Yes, because there is a depreciation on the building, so let's separate it.
We are bringing the final figure, the net book value.
Okay.
We can even add the two. So what is the land amount?
The land amount.
Is it the 4,000? Yeah. And amount. Yeah.
4,000, right?
4,000.
Then what of the building?
5 8 5850.
5850.
Yeah.
Okay, so 5850 and then the 4,000. So what do you have?
9850.
9850. What else? Yes, apart from the what else? Equity, equity. What else?
Equity.
Revaluations of loss.
Yeah.
So what revaluations of loss? Land and building.
We had 3,000 and
1,000. Is it 3,000 flat?
yeah,
Land building is how much?
2,800.
2,800. So what do you have? 5,800.
5,800.
What else? Then we prepare our statement of changes in equity.
Changes in equity.
Statement of changes in what? With changes in what? Equity. Changes in what?
Equity.
And I'm making an statement. Equity.
Equity. For scholars and associates. Equity.
Okay. Okay.
Not equity. Equity.
Okay.
Equity is for UGDS.
Hey, Bema. Roddy Kundi. So, what will be the that will be what? I can't think. What is the heading? That will be is it revaluation surplus, retained earnings, what else? Another retained earnings and what? Yes, we treated the format for the statement of changes in equity. IAS 1 format for the statement of changes in equity, revaluation surplus, What else?
We can have capital surplus.
Capital surplus. Another name for capital surplus is what? What's another name for capital surplus? Surplus. Hey, yeah, go check it format of changes in equity. Where is my? Let's check the format. That was okay.
Is it that one that is called the share premium?
Share premium is not in Ghana. It's not in Ghana. We don't do share premium. But in the format, it will be part because it's UK. It's CCA would look at that, but ICAG would not consider share premium in Ghana. Hey, format no way. Okay, can you all see the format?
Yes.
Can you see the format?
Yes,
Yes,
we can.
It's not
So stated capital. Is
Stated
someone
capital,
speaking?
retain
Yes.
earnings,
Retain
equity
earnings.
surplus.
Equity surplus. Equity surplus. Which of them is the revaluation surplus? Which of them is the revaluation surplus?
Equity.
Oh, okay. Okay. So now let's go back to the question and finish it, and we call it.
Wait more.
Wait more.
Oh.
Please wait more.
Please, it's okay. Thank you.
Well, will came. Well, we come. Okay. So now, can we go back and finish it up? So,
Yes.
where is my? Okay. Revaluations of retained earnings and then stated capital, right? Mm-hmm. Do you have any balance brought down? Do you have any balance brought down? Any balance brought down? Yes.
I think so.
What is the balance brought down? What is the balance brought down? Stated capital. We don't have any balance brought down. Apart from balance brought down, what else? Net income, right? Net income, that is profit. Profit will go to retained earnings. All your profit will go to retained earnings. Dividend will be paid out of your profit. Dividend will be paid out of your profit. Fair value surplus, revaluation surplus. Where would the revaluation surplus go?
Go to the equity surplus.
Which we have the revaluation surplus. So the revaluation surplus should go there. What is the amount for the revaluation surplus?
5850.
Hey.
858.
5,800.
5,800.
5,800.
5,800.
Revaluation to fair value surplus. Is that 5,800?
Yes, 5,800.
And that is the summation of the two. Okay.
Yes, please.
Then what else? What else?
You go to equity and
Equity and what?
the revaluation will go to the equity earnings. So you wrote it under retained earnings.
Did I write it under retained earnings?
Yes,
I
you
wrote
did.
it under revaluation surplus. This is retained earnings.
Okay.
So what the revaluation surplus? That's the same thing.
Okay, sure.
Do you have any balance brought down? No. You don't have a balance brought down. So what else? So now let's come and compute our asset depreciation. What is our asset depreciation? What is our asset depreciation? So what is our asset depreciation formula? Asset depreciation is what? It's not part of this. Let me even claim before someone writes it as part. This is a separate working somewhere. Asset depreciation. Asset depreciation.
Revaluation
surplus.
Revaluation surplus over the useful life.
For what? Remaining useful life.
Yes.
So what is the revaluation surplus?
The revaluation surplus is 5,800.
Revaluation surplus is how much?
5,800.
Okay. Okay. 5,800. So, and then what is the remaining useful life? 40. Okay. But do you think it's prudent to bring the land as part of the revaluation surplus? Is it prudent to bring the land to? I don't think we are supposed to bring the land. I don't think we are supposed to bring the land here. Let me see. I'll check. I'll check why we don't bring the land there. But I'm thinking we're not supposed to bring the land there. But I've forgotten the reason why. So I'll check, right?
Is it because it wasn't depreciated?
Yeah, we don't depreciate land. We don't depreciate land, but if it wasn't depreciated, so it wasn't depreciated, so but then we revalued it as well. So if we are looking for revaluation surplus, why shouldn't it be added? But I'm contemplating on it now. But I would find out and give you the feedback. You can also go and search for it. Why do you think whether we are adding the land as part of the revaluation or not? Whether we are adding the land as part of revaluation or not. So for me, I don't think I would add it. So let me. Or should we add it? Wait, okay, let's try this and see. So what is the revaluation? 5,800 over what? 40, right? What are you
Yes.
getting?
You get 145.
100 and what?
45.
45, which is your asset depreciation. Let's try and go and find the difference. Let's use the other method and see. The other method. Let me see. The other method where we will find the. Let me see. So how do they do it? The annual depreciation before revaluation. Annual depreciation before revaluation. Annual depreciation. What is the depreciation before revaluation? Annual depreciation before revaluation will be what? Annual depreciation before revaluation. Depreciation is cost. What was the cost?
You
4,000 over what? Over what? I'm talking about the building. 4,000 over what? Useful life is 50 years, right?
yes, please.
To split, I'm talking about this one. Look at this. And that is giving us what? That will give us what? 4,000 giving us what?
80.
80. Okay, 80. Now, yeah. So annual depreciation after revaluation. So this is before revaluation. Before revaluation. This is after revaluation. After revaluation is giving us what? That one, after evaluation, what is the amount? What is the depreciation? So the depreciation will be the cost. This is now the cost. What is our cost? Where is the cost? Revaluation amount, where is it? Okay, 6,000.
Yes.
6,000 of what? What is the remaining useful life? You remember that when you are using the revaluation, we use the remaining useful life, right?
Yes.
240. What are you getting?
150.
150. Some Someone, why is anyone not asking me? Why didn't I do for the land and building? Land and building, so let's do the annual depreciation before and after, right? Right?
Yes.
Can we do land and building before and after?
He's talking about land.
Yes, land. Can we do before and after for annual
No,
depreciation?
it
No,
wasn't depreciated.
because land does not depreciate. Therefore, we are not supposed to. Okay, so you wait. So now let's find the difference. Let's find the excess depreciation. What is the asset depreciation here? Asset depreciation is what? You
It
remember
was
the
one.
first one? We had when we were doing comparing it, we had one to be is it 600 and the other and the down one to be 800. Do you remember that?
Yeah.
And then we had the asset depreciation to be 200. This one, what are we getting?
First one. I'm confused.
Who is confused? 150 minus 80.
Oh, okay.
See the first one we had 800 minus 600 and then we had said 200. Then we compared it to the Formula 1. I don't know if you remember.
Yes.
We used the Formula 1 and then we used the analysis one where we compared it and then find the difference. So I want us to try work it on here so that we all understand why I'm thinking that we don't add the land. Because we see when I was doing for the annual depreciation, we didn't you guys did not agree that we should do for the land because you told me that land doesn't depreciate, so I can't do the annual depreciation for that. So the annual depreciation, I'm getting an excess depreciation of what? 150 minus 80. That is giving us what?
70.
That is giving us 70. Now, now if we do for look at this. When we did for the 5,000, you said 5,800 divided by 40, you had 145.
Yes, please.
Is it the same as the 70? Is it the same as the 70?
No.
Now, so let's now find the excess depreciation without the land. Excess depreciation without the land.
You get 70.
So you get 70, right?
Yes, please. It will be 2,800 over 40.
2,800 over 40. That is without the land, right?
Yes, please.
So that is 70. So this will tell you that we should use without land. Do you get it now?
Yeah.
The entire class, do you get it?
Yeah.
So you see, we don't use, it means we don't add the land. We don't add the land. What do I say? So we don't add the land. Since you are not depreciating it, you can also not. So what do you think will happen? This excess depreciation, now let's work it on the changes in equity. We'll transfer it from, I don't know whether you said that statement. Look at that statement. Read the question again. I want you to understand the question and the reason why we are doing this. Read the question.
The latter part.
Yes.
The company's policy is to make an annual transfer of realized amount to retained earnings.
To retain what?
Earnings.
So annual transfer, as I was saying, we transfer to what? Retain, is it retain earnings? So now, do you now agree that we should use 2,800?
Yeah.
So we are using 2,800. We are using 2,800. So what do we have? 2,800. Okay. So we said we have transfer from where? From where to where?
From realized amount to retained earnings.
To retain earnings. So the transfer will be from the surplus, which is what? 70, towards retained earnings. You get it? You get it? Hello. Hey.
Revaluation surplus. Okay. Yes.
You get the reason why we are doing that?
The format you I think you've interchanged it. So it's making it a little bit like
confusing.
Capital, retain earnings, equity.
Just look at what is at the top. The format is not static. What you write at the top, that is what you record under. So even if I bring it here, look at what is at the examiner will look at what is at the top. 70. It means you are taking 70. Transfer from revaluation surplus to retain earnings. So I'm sorry for interchanging it. Next time I will not do that. Okay.
Okay.
I'm sorry. So I believe you understand me. So always when you're done, compute your excess depreciation, right? Excess depreciation, and that will be the revaluation. So I think the formula work is much easier, right? The excess depreciation as compared to the analysis. But you see, if you are not too sure, you do the two and see whether you are arriving at the same answer. You get it? Like how we did for our own.
Yeah,
You see, we were not
yeah,
sure,
we got it.
and we did the analysis to know that, oh, okay, land we cannot depreciate it, therefore we cannot do the analysis for land. If we cannot do for land, that means the asset formula 1 2 we cannot include land in it. Simple. So on that note, we shall call it an evening.
Nice. Hey, and
Is it evening or night? Yeah, night.
Okay.
yeah, call
Okay.
it.
Enjoy the written. Remember to do the assignment. I think, yeah, I need to give you more assignment. Don't worry, I'll take more assignments from your tutorial set so that you practice. If I don't practice, no, yeah. That's now. Oh yeah, accounting. Who's there? Oh, what that? Just last minute. Oh, train last minute. You go for tutorials 1 hour, no better. Hey, accounting student, you don't do that too. Solve more questions. There are many questions in the tutorial set. If you want me to be sending you questions to be trying your hands on, you can just tell me so that I do that. Because
Oh,
media
please do that. Send us
when is
questions.
sorry.
I said, please kindly do that. Send us questions.
Okay. As if you guys will do it. You don't do it. The assignment that I gave you, did you guys submit it? No, you didn't submit it. And if you didn't even do it, because I'm sure if you did it, you submit.
I mean, I wasn't in class and I didn't get any recording for the class.
Eh?
I
Recording
wasn't in.
them. How much to send the recording is? Nah, let me do. I'm not teaching you alone. I'm teaching other people too, and I'm also doing other stuff. So busy. If you don't pressure me to do it, then it means me too
I,
much, too
I,
much.
I even
If you,
texted you personally for the recording, but you didn't mind.
hey, who is this?
Yeah.
Leah.
Nana, yeah. Yeah.
And you tested me for the recording,
Yes, please.
and I gave you is it green tick or yellow tick?
Uh,
Did I give you
I
green
mean,
tick or yellow tick?
I read receipt, so if you read or don't read, I can't see.
You mean when I read that it's blue tick, so it means I've not even opened it. When you don't see blue tick, then it means I've not opened it.
You have.
Ah,
After I sent you that message, we have been testing.
hey, then maybe you tested me another time on a different question, and then when I opened it, I assume that by now you have found the solution to that, right? But then train yourself such that when you come to class once, even if you don't get recording, you should be fine. So you position yourself as if you are in a class, face-to-face class. You write everything, and like you just copy everything, and then that's it. When you want to do revision, you refer to the book, to your written notes. Yeah, keep note to every any point that the teacher will say. Like, it says depreciation, we do this. I'll write that statement in the corner somewhere. Write everything. What the teacher, hey, needs critical point. I just write it, note it down. So when you're having this, you transfer it. You transfer it from this to that. I keep. If you look at my notes, if you get my note, you can understand everything just with the note. That if you don't go for classes with just the notes, you someone who doesn't know anything will just read the notes because of the point that I'm making. Some will be like, oh, okay, so this is the reason why you are doing this, blah blah blah. But some of you, I don't know how you do your things. Hey, yeah, do. Anna, I don't know how you learn. Okay, we are in there. All right. Some of you are shy, so you see, I know some people they don't even they send some small exercise book. My friends, my other friends, they don't even write. Huh. The valedictorian and then one guy Foster. They don't even write. Once I'm busy writing, they would not write. And then when you go for tutorials, you go for class together. Hey, they have different heads. They'll be an argue. Me, they are like step by step things. Me, I don't want to.
Okay, sir. So please, go next week. Will it be at the same time or you shift it to 3:30 again?
Myself, the 3:30, I'm not happy with it. If you have to take it now, also be mass. Like any mass, but I mean, figures. Me better now, my being in association, maybe at 3:30. But 5:30, I'm cool. That one, the weather is cool. I like it. 5:30 and the 6:30. But because of
Please,
the chairs,
6:30 is okay. 6:30.
you said?
6:30 is okay.
Okay, let me see. Maybe I'll change my church time to another group and see what I'll be joining that group on Saturday and then Sunday I'll be free. I would consider that and see.
Okay.
Been learning ahead. Learn more than me. Learn more than what we are doing here. If you want to master financial reporting, you don't just follow me. Master, learn hard. Try different questions, complex questions, solve tutorial questions. Like challenge yourself. Don't just depend on this online. We don't solve as many questions as we can. Moreover, if we what we did today, now we're questioning us, why did we do this? Understand when you understand the thing, no matter the question. Hey, if you understand the thing, no matter the question, you apply what you want. FR is application. The OT has no obey. After you not get 100/100, but you get much more takes. This one too it takes so. Look, they'll mark this one correct, correct, correct. Maybe when you make mistake, wrong, wrong. Change it to equity, correct. Like they just mark takes. So the more your takes, the more you are passing. That is how FR is. Accounting, that's how accounting is. They mark takes. To make sure you maximize your takes. If you don't know anything, it means you not write more. The work what I want to go, you don't know, so you will just be there. Maximize your takes. Don't wait last minute. By this time, I say we are there. Why we PPE? Oh, yeah, Niama. So the next time we move to the other standards. We are going bit by bit. We'll finish, we'll solve questions, and then you go and face your exams and kill it once and for all. Enjoy the rest of the evening.
Okay, thank you.